Hey everyone, welcome back to the Crypto Code. Today we're going to talk about something that applies to every single Bitcoin cycle. How to recognize the levels that actually matter. These zones often decide whether Bitcoin is gearing up for the next major rally, or if it needs one more correction before continuing higher. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice, so do your own research before you make any crypto trades. Okay, so let's start with why certain levels are so important. Every Bitcoin cycle creates a handful of zones where the market shifts direction, where emotions flip from fear to confidence, or from greed back to caution. These levels aren't random. They form around patterns that repeat again and again, Fibonacci retracements, old consolidation ranges, and key psychological round numbers that attract heavy buying and selling. Whenever Bitcoin revisits those zones, two types of players emerge: the impatient traders who panic and the patient investors who quietly accumulate. That difference in behavior is what separates long-term winners from short-term noise chasers. Now, to really understand this, it helps to look at Bitcoin's repeating rhythm. Every market cycle moves through three main phases: expansion, correction, and accumulation. Expansion is the exciting part. Price breaks out, everyone's talking about it, and momentum feels unstoppable. Then comes correction, where the market cools off and liquidity resets. Finally, accumulation begins. That quiet sideways period when most people lose interest, but the strongest hands start loading up again. The biggest rallies in Bitcoin's history always started during that silent accumulation phase, when enthusiasm was low, but smart money was positioning for the next wave. Next, let's talk about something called confluence. When multiple signals line up in the same area, for example, if a Fibonacci retracement level overlaps with a historical demand zone or a long-term moving average, that zone becomes far more meaningful. It's not about calling an exact price, it's about spotting regions where probability shifts in your favor. Those overlapping signals create powerful setups, the kind of zones where institutional traders, long-term holders, and algorithmic buyers often enter together. That's when price action starts building the foundation for a new trend. Momentum is what confirms that shift. When Bitcoin breaks above a major resistance and stays there, it shows strength, not just from retail traders, but from larger, more patient capital re-entering the market. The same works in reverse. When price defends a support zone multiple times, it often signals that buyers are quietly reclaiming control. Instead of guessing every move, it's smarter to wait for confirmation. That moment when structure, momentum, and volume finally align. That's usually the spark that leads to sustainable moves, not just temporary spikes. Of course, no analysis is complete without looking at the bigger picture. Bitcoin doesn't exist in isolation, it reacts to broader macro trends. When global liquidity improves and risk appetite returns to markets, Bitcoin tends to strengthen. Even when conditions tighten, its long-term foundation remains resilient because adoption, scarcity, and network demand continue to grow. That's why the greatest opportunities usually appear when sentiment is quiet and conviction is low. Crowd waits for certainty, but smart investors act on structure and patience. So to wrap it all up, look for the zones where structure and demand overlap, wait for confirmation before jumping in, and remember the calm, boring phases are often where the biggest moves begin. Bitcoin has always cycled between excitement and silence, and each time those who recognized the shift early came out ahead. Don't chase hype, study the rhythm, stay patient, and stay focused. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.